Hello friends, welcome back to another video. Today let's discuss about the AZEK Company, ticker symbol AZEK, who are one of the market leaders in the sustainable outdoor living products industry. They manufacture environmentally sustainable products like deck boards, railings, lighting and outdoor furniture, and use 100% recycled materials, which replaces the use of wood on the outside of houses and buildings. The company was founded way back in 1983, but only recently became publicly listed in 2020. Since then, the stock price has been quite volatile, with the price hitting a high of $51 back in May 2021, and now it's trading just around $30, very close to where the company began trading publicly back in June 2020. Obviously, the overall market volatility might bring down the stock price further in the short term, but I wanted to continue reviewing different companies like this and their business models to see if there is an opportunity to buy a few shares at these lower prices and hold for the long term. So before we get into their financials and valuation, let's quickly review AZEK's business model in a bit more detail. The company's building product division manufactures home building materials under the brand names TimberTech and AZEK Exteriors. TimberTech manufactures polymer and composite decking products as well as railing, porch, lighting, and paver products. AZEK Exteriors, on the other hand, manufactures siding, trim, and molding products. In addition, the company has several other brands, many of which were companies that AZEK acquired over time to continue improving their product portfolio. These brands include Ultralox, which manufactures aluminum railing systems for both commercial and residential use, Structure, which is a manufacturer of designer pergolas and cabanas, Versatex, which manufactures trim boards, Scranton Products, which manufactures plastic bathroom partitions and lockers, and Vycom, which manufactures PVC products that are used in a variety of applications. Now let's look at AZEK's financial performance. As you can see here, the company has been bringing in increasing revenues consistently over the last 5 years and managed to grow revenues even in this current market condition, which is quite impressive. So it will be interesting to see if the revenue growth will continue to be over 20% in the next few years, or if it will slow down into the mid to high teens, which is still impressive growth. AZEK is also profitable and have been consistently growing their profits over the last 5 years, and as you can see here, they are also able to retain their adjusted EBITDA margins in the 23 to 24% range. The company's fiscal year ends in September, so they also reported their 2022 Q1 earnings recently, and as you can see here, the revenues came in at $260 million, up 22.3% year over year, and they also reported a net income of $16.7 million compared to $6.6 million year over year. AZEK also provided their outlook for the full fiscal year of 2022, indicating that they expect revenues to grow between 17 to 21% year over year, and the adjusted EBITDA to grow 18 to 22% year over year. As part of this, they also expect their Q2 numbers to be 24 to 27% higher compared to the previous year. Let's now look at some key fundamental metrics and ownership information before we dive into valuations. As you can see here, the company's market capitalization at the time of recording this video is $4.75 billion. The price to sales ratio is currently at 3.73 compared to the 5-year average of 5.39, and this means that the stock is now cheaper compared to historical metrics. The PE ratio is at 39, which is still a bit pricey, but obviously the market is pricing in future growth. We can talk more about this shortly when we discuss valuations. AZEK's short and long-term financial position is also looking very good, as their current ratio is at 2.69 and the long-term debt-to-equity ratio is at 35.89%. I now want to point out a couple of risks that we need to be aware of before investing in the stock. As you can see here, the company's outstanding share count has increased over the last few years, and they could continue diluting existing shareholders in future in order to expand their operations and make acquisitions. Another risk is obviously a potential recession or market slowdown that could be caused by macro factors like interest rate hikes, which will in turn affect the real estate market, and this may cause some short-term difficulties for this company. But again, as long as the company is financially well positioned to ride through such a recession, I think they can expect to do well in the long term. Moving on, we can see here that there is a significant institutional ownership with 98% of the outstanding shares being owned by institutions including Vanguard, BlackRock, and even government institutions like the Ontario Teachers' Pension Plan. So this is a very good sign that so many institutions believe that this is a good investment. The company insiders, on the other hand, only hold 3.76% of the outstanding shares, and I would like to see this number a bit more higher in future, as that will encourage management to be more efficient with their decisions and strategies if they also have more skin in the game. Let's now discuss valuation using some scenarios to estimate the future revenues and profits and see if it is worth investing in AZEK at the current stock price. So here are three scenarios with different annual revenue growth projections of 10, 15 and 20% in each scenario over the next 5 years. I have also estimated the future earnings and the price to future earnings multiple under each scenario. Now based on these estimates, we'll get a 97% return if scenario 3 evolves, break even under scenario 2, and could lose 49% in scenario 1. In my opinion, all these scenarios are quite possible, as the company does have the potential to keep growing their revenues, or we could end up with a situation where more players come into this industry and take away some of AZEK's market share. Having said that, I do really like AZEK's business model and also the fact that several large institutions, including the Ontario Teachers' Pension Plan, are shareholders. But I also feel that it is better to wait for lower prices before buying the stock so that we can make money even if scenario 2 evolves. So I'm hoping to buy shares at an average cost of around $20. And while waiting for lower prices, I'll be selling June 2022 put options to collect some premiums. As you can see here, by selling the 22.5 put option, we can get an annualized return of 11.39% with a huge safety net of 26% from the current market price, as we will not lose on this trade unless the stock goes lower than $22.50 when the option expires in June 2022. Do let me know in the comment section your thoughts on AZEK and its business model. And I hope you liked this video, so please don't forget to hit the like button and subscribe to my channel. And as a friendly reminder, I'm not a licensed investment advisor, so always remember to do your due diligence before making any investment decisions. That's it for now. You have a great day, and I'll see you in the next video.